Stocks swing between losses and gains in a volatile trade. Realty and consumer durables are key gainers, while utilities and autos are big drags. It's the mid-caps that underperform.
Hindenburg Research, following its report on Adani, has now flagged issues to suggest the SEBI chief's complicity in the matter and cited this as the reason for the SEBI inaction. The SEBI chief, Madhvi Buch, responds firmly to the allegations and do others named as well, including Adani, 361 WAM and SEBI itself.
Jubilant Foodworks fires up on delivering growth in a weak environment. Voltas climbs on heady sales in the warm summer, but Balkrishna Industries skids on challenges ahead, even as Sun TV feels the heat as ad and subscriber numbers dip.
Ola Electric jumps 20% in trade to hit the circuit breaker. The move follows gains of 17% on listing day and comes ahead of its e-bike reveal on the 15th of August.
CVC Capital Partners clinches a near 7,000 crore deal to buy out existing promoter Kedara Capital from affordable home loan player Aavas Financiers. They'll also make an open offer to minority shareholders. The stock jumps.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Mangalam Malu. Well, today is turning out to be a day where we have seen quite a lot of volatility in terms of trade, but what we are seeing now is a recovery from the day's lows. So the Nifty is up around 200 odd points from the day's low at this point in time. We have the mid-caps, which are not doing too badly at this point either. So the mid-cap index is just about going to break into the green by the looks of it. So it's just about flattened out with just around a 35-point cut. Advanced decline ratio, let's see whether there's any kind of improvement as the day goes along. It's currently on the declining side. So around 1:1 is currently where it stands. Let's see if there's any kind of significant crisscross that takes place. But otherwise, it's a lot about stocks. So we mentioned Ola Electric, Aavas Financiers, Voltas, Jubilant Foodworks, Zydus, just to name a few in terms of a buzzing number of stocks today. Hi, Mangalam.
Hi, Ekta. Absolutely. It's all about stocks. A lot of them doing extremely well in today's trading session. But you know what's good about today's trading session so far is that dips have been bought into. The sort of uncertainty that there was over the weekend with regards to the Hindenburg allegations coming in on Adani, that has actually come by in terms, the street has taken note of that and, you know, put it behind its back as well. We've got clarifications from all parties and we've seen the biggest barometer of that is the recovery that we've seen from the lows on all the Adani Group stocks itself. So the street is looking ahead. They've put forth all these uncertainties and allegations behind, and the mid-cap index too that has recovered. It's the HDFC Bank stock which is led from the front for the Nifty Bank as well as the Nifty itself. So all these stocks doing extremely well. The mid-cap index briefly went into the green as well. We're talking about a lot of these individual stocks. The biggest gainer right now in the F&O pack is Jubilant Foodworks, a fresh 52-week high on that stock. And this is on account of a solid set of numbers that have come by. So if you just take a look at the Jubilant Foodworks numbers, there are 5 major reasons why the stock is up around 10% right now as we speak. The first one is that, you know, even as the like-for-like growth came in at 3%, largely at the higher end of street expectations of 2 to 3%, delivery saw a growth of about 12%, and that's a positive. And in this environment where, you know, you have something like a Westlife which reported a 7% decline in same-store sales growth, Pizza Hut, KFC down anywhere between 6 to 9% in same-store sales growth. Burger King's the only one which reported about 3% positive same-store sales growth. This, on the base that Jubilant Foodworks sits on, is a big positive. Second important reason is that even the reported numbers are not particularly bad. You know, on a standalone basis, the revenue above expectations, the EBITDA in line with expectations, the net profit as well, not too far away from street expectations for around 55 crores. They've reported around 52 odd crores as well. They've continued to add stores. So Domino's at around 34 stores versus expected 40-45 stores. And non-Domino's portfolio is doing extremely well as well, be it Hong's Kitchen or be it Popeyes, where they've added about 8 odd stores as well. Point number 4 would be that, you know, the non-Domino's part of the portfolio doing well and the non-India part of the portfolio as well is doing well. Remember, same time, you know, last year they did not have the DP Eurasia business in their books, but now that is contributing about 400 crores to its revenues, with Domino's Turkey doing about double digits like-for-like growth, and the other brand, Coffee, COFFY, doing about 7-8% growth out there as well, slated to become the 3rd largest beverage player in that market itself. So all these factors working well for Jubilant Foodworks, and it was a stock which was underperforming for a while now. So the street is now betting on this turning around, and as a result of which brokerages are positive too. That's a near 9% up move that we're seeing.
Okay, that's on Jubilant Foodworks. But what about Honasa?
Well, Honasa reported a good set of numbers, but it's the near-term uncertainty which is keeping the stock under a little bit of pressure today. In terms of reported numbers, if you just look at Honasa, 19% revenue growth far outbeats the others in the industry with 25% volume growth as well. The EBITDA grew by about 58%, margins improving by 200 basis points, and the net profit growing by about 63% as well. What the street does not like is that there is near-term uncertainty on inventory rationalization because of the distribution revamp that the company is doing. They told us this morning that it would be close to around 150 basis points of their sales, and ad spends as well. The street was betting on ad spends to reduce as a proportion of sales as all the other brands, scale up. But this time around, it's around 36%, and the company does not believe that it will go much beyond that 70 to 80 basis points over this year itself. But nevertheless, they will continue to hold 20% revenue growth and 150 basis points margin growth guidance. The key drivers for them: Mamaearth gaining market share, new products doing well at 9% of their sales, and the third one is offline, which is now around 2 lakh outlets is where the company reaches, has increased by about 30%, and that would also be one of the growth drivers for them going forward.
Okay, all right. Thanks very much for that. So that's on the entire retail/consumer space. But the other one that we're tracking is Voltas, which is surging today on the back of what was a strong set of Q1 numbers. Upasna is here with the details on what's driving the counter. Upasna.
Thanks so much for that. Voltas reported strong set of numbers in its Q1 FY25 above street estimates. Strong growth was mainly driven by the company's UCP segment, which is nearly 77% of the sales. EMPS segment also recovered sharply this quarter and turned positive. Now coming to revenues first, the revenues stood at 4,921 crores with an uptick of 47% on a YoY basis. EBITDA saw growth of nearly 1.3 times at 424 crore, leading to a sharp EBITDA margin expansion of 310 basis points at 8.6%. PAT stood at 335 crores with an uptick of nearly about 1.6 times. Now coming to company's key segment, first up is UCP segment, which was the key growth driver. As stated earlier, recorded a strong revenue growth of 51% on a YoY basis, and margins in this segment also expanded by 40 basis points at 8.6%. Company's EMPS segment turned positive and revenue growth was about 40% on a YoY basis, and margins turned positive at 7%. And lastly, company's engineering products and services segment saw a revenue growth of about 13%, but margins declined by 100 basis points at 28% on a YoY basis. So all in all, strong set of numbers reported by Voltas in its Q1 FY25.
All right, that's about Voltas. Remember, the stock had been under pressure before the numbers, so an element of short covering playing out as well. Let's focus on some of these PSU stocks, which are witnessing a silent sell-off on the back of their first quarter performance. Hormaz is tracking them for us. Hormaz, a big up move is what we've seen in the PSU stocks in the past, but surreptitiously over the last month or so, these stocks have come off.
Indeed, and it is almost as if the street was anticipating that there might be some bit of anomalies when these numbers come out, because at a time when all these PSUs were going up and away, they were talked about almost every single day. But then during over this last 1 month, month and a half, when there has been this silent sell-off that has come in most of these PSU names, be it the likes of RVNL, Bharat Dynamics, Midhani, Ircon, all of them, if you see, have corrected anywhere between 20 to 30% from the record highs that they made in mid of July. And since then, these stocks have come off after that. Now, you start off with some of the numbers that were YOY decline, if you can say, because the estimates were very few. Bharat Dynamics is one of them. The profit was almost wiped out during the quarter. Revenue was down 36%. Margins, the EBITDA loss also widened on a year-on-year basis. Execution issues continue to hamper the company, and it is reflective in the stock price as well. Midhani was the other one that reported results over the weekend. Revenue was down 13%. The profit down 70%. The margins also saw contraction from almost 22% to almost down to 14% now at the end of this quarter, and that was another disappointing result. And that's kind of started off last week when these railway PSU started reporting numbers, be it RVNL or Ircon. Even RVNL saw revenue declining almost 30%, profit was down 35%, margins were down to just 4.5% at the end of the quarter, and that stock has seen a surge of almost 300% this year, almost 200 to 300% this year itself. And therefore, but not all PSUs have had bad numbers. Cochin Shipyard is an outlier in all of these because the revenues here were up 62%, the profit was up nearly 80%, the margins also saw an expansion of almost 600 basis points on a year-on-year basis. But still, that stock too has corrected almost 30% from the record highs. On the valuation front, despite this correction that you have seen, they are still pretty expensive when you compare that to their 5-year averages. Look at RVNL, still trading at almost 59 times price to earnings on a 1-year forward basis, and a 5-year average is just 12 times. So it shows the kind of run-up that these stocks have seen. Even Bharat Dynamics at 39 times, 5-year average is almost 30 times. Another outlier here is Cochin Shipyard. Despite good results, trading at almost 51 times price to earnings on a 1-year forward. The 5-year average is just 14 times. And we are awaiting some more numbers from some stocks that have run up significantly. Mazagon Dock is one of them. That too has come off 15% from the record highs. HAL around 18% from the record highs. Both of them reporting numbers on the 14th. So we'll keep an eye out on both of these names, but then this silent sell-off in the PSUs is a thing to watch out for.
Absolutely. Point taken, Hormuz. There is definitely some shaving off of interest which has come in on a couple of these PSUs. But just talking about stocks which are seeing profit booking, just watch out for Zydus Life, because that stock came out with a very good set of numbers. It reacted positively to it, but it's seeing a downtick today. That's because the street probably is a little concerned about the valuations. The stock is up 80% on a year-to-date basis. The likes of CLSA has downgraded the stock today, post the numbers. That is because of the punchy valuations. We'll take a short break, but on the other side, we'll connect with the management of Morepen Labs to discuss their earnings. Stay tuned. Welcome back. Well, let's talk about a couple of companies then which came out with numbers. Morepen Labs is on our radar today. Q1 was a good quarter for them with improvement in margins and a healthy revenue growth as well. The company has raised 200 crores via QIP earlier this month. To talk more about the business, we have Sushil Suri, who's the chairman and MD of Morepen Labs, joining in now. Mr. Suri, thank you very much for taking the time out. Thanks very much for joining in. We'll start with your revenue, because that was a good double-digit growth that you showed this quarter. I wanted to understand that within that, the medical devices, it's a relatively new business for the company as compared to, say, your APIs. It was up 20% this quarter on a year-on-year basis. What led to this 20% growth in the quarter? If you could break it up for us in terms of the domestic market, the exports, which are the segments which are doing well, and is it sustainable?
Yes, I think you raised a nice question. Is it sustainable or not? That way, I would say, Ekta, that this is an interesting model that we have a fixed base of customers who buy our strips regularly. Basically, in medical devices, we are into two businesses, primarily glucometers and BP monitor. So glucomonitor is like an annuity business. We keep installing the meters in the market, and when the customers buy meters, and of course for the lifetime, they have to buy the strips. So it's an interesting model. So as we speak today, so we have 1.2 crore meters in the market. It's like 12 million meters in the market, which is almost 20 to 30% of the market. So those meters keep on adding the strips. And if we stop selling meters, so certainly the growth would stop, but we keep installing more and more meters. That is what is adding to the revenue. So even if we add 10% meters extra, so we get 20 to 25%, 30% returns. That is on the meter side. Second is the BP monitors. So BP monitor also has registered a good growth, around 21% growth. So this is an interesting model. And more importantly, is it sustainable? That way, I would say it's just the tip of the iceberg. The Indian medical devices market has just opened up. And as per the Investment India, Government of India portal, so this market is only $11 billion. It's 90,000 crore. It's just
so that point is taken. Just to get some figures out of the way then, medical devices is now what, 30% of your sales? So how 30%. much do you envisage it will probably grow to, and by when?
Slowly this is certainly inching up. Last year it was 26%, now it is 30%, particularly this quarter it is 30%. So if it keeps growing at the same volume, I would say maybe in 3 years time it will be around 40-45% of the business. But more important will be it's a long-term business wherein we do not see any ups and downs because we have a inherent customer base. It's not unlike in API, we have B2B, wherein every quarter we have to find customers and every quarter whether they will buy or not. But sugar testing is one you are diabetic, then you are diabetic for the rest of their life, most likely.
All right. What about margins? Because last 3 quarters, ever since it broke into that 11% mark, it's maintained above that. In fact, now as we speak, it's around 11.3%. So should we consider 11% as the base now going forward? And what are the upsides here?
Mangalam, you rightly guessed that this is a base now, and as we go forward, and as earlier said that once we have installed the meters, I keep on selling strips, we obviously make more money on the strips, so our margins are going to increase in the medical devices certainly. And BP monitor also, last year we started 100% manufacturing in India. Of course, we are manufacturing everything in India now, but BP monitor last year was a full swing. So our margins are increasing in BP monitor also, our EBITDA is increasing. And by the way, this quarter was the highest EBITDA ever in last 40 years, thanks to all our backward integration in medical devices. And in API business, there is some confusion that because of the China factor, last 2-3 years were badly affected. I would say worstly affected on the EBITDA because the prices were going high. But this year, because of the softening of prices in China, the API margin have also returned back. So this is a good news, and we hope to sustain it. And the whole idea is that we keep on changing or evolving our product mix in such a way that the focus should be on the margins.
We take that point, Mr. Suri. While your EBITDA is at a historic high, what's also interesting is that it was only last year where your cash flow turned positive, cash flow from operations turned positive after 2 years of a lull. Even last year, EBITDA was 2 times your operating cash flow. And at the same time, the street is looking at your dividend payout. Your receivables have increased, as have your payables, along with your inventory, etc. as well. So, one wants to understand this year, what is the kind of operating cash flow that you would make? What would be the net working capital days? And at the same time, what is the kind of dividend payout plan that you have?
I would like to say that certainly the cash flow is a very big, complicated game, that net cash flow from operation. For a mid-sized company like ours, we hadn't had any capital event for the longest time, and we are a debt-free company. So our cash generation goes into working capital and capex both. So every year we do 40-50 crore rupees of capex, which is again going from the cash flow. So of course it is deducted from the operational cash flow. Second is the working capital. In working capital, of course, we have a normal working capital. There's no extra increase. Normal typically 60 to 70 days for devices and 80 to 90 days for the API. So we are good to go there. The only difference is in last 2-3 years, when post-COVID, there was a more focus on the domestic market. And rightly so, the global markets were shut in a way. So we have seen that in the domestic market, the debtors are very high. And of course, the credit periods are high and the debtor serviceability is also very low. So we are now trying to cut it down. During this quarter, we have cut down the domestic sales to a little extent, just 8-9%. We are focusing more on the export. The debtors are less, profits are high. So domestic markets are again China based. So there is a lot of price fluctuations also. So we are trying to make these corrections. And certainly we are cash positive quarter on quarter. But now post this QIP, all our additional capex requirement would be met from the QIP funds, I would say, and the additional working capital would also be funded from there. So the operational cash flow would be much better utilized and much faster recovery and much faster turnaround than, because earlier we were going very slow in all things.
Okay, all right. We're going to leave it on that note, Mr. Suri. Thanks very much for joining in and speaking with us. So that's Morepen Labs. Stock is doing well. It's up around 5-odd%. They're expecting the medical devices segment to grow to around 40 to 45% of sales. And API margins have improved due to the softening of prices in China. Well, we need to take a short break, but up next we'll go full tilt on the markets. Manish Hathi-Ramani of Deen Dayal Investments will join in with some trading calls.
Welcome back. You're watching us here on Halftime Report. There's been a smart recovery from the lows for the market. The Nifty as well as the Nifty Bank all of them doing extremely well. It's the Nifty Bank which has led the recovery. So let's talk about what are the stocks in the Nifty Bank which are contributing. We have HDFC Bank doing extremely well, up around 1%, but Axis and Kotak as well. The private sector banks doing well for the Nifty Bank to come off lows, and as a result of which the Nifty to recover as well. It's the mid caps which is a wee bit of a problem today. While it is off lows, it is still underperforming in the red. And if you look at the advanced decline ratio as well, right, while it has come closer to each other, these lines, we still have a little more stocks declining than the number of stocks which are advancing. So this towards the second half of trade is something that I'll be watching out for very, very closely. For the Nifty, on the way up, 24,544, which is the 20-day moving average, remains to be an important resistance on the way up. So let's see whether it goes ahead and crosses past that or not. On the Nifty itself, because we've recovered from the lows, the 24,300 put has been extremely active. Even the 24,400 put writers have been pretty active, telling you around 24,250 to 24,300. There could be a firm amount of support for this index on the way up. Again, like I pointed out, 24,450, 24,550 could be a bit of a resistance, and that's what we've seen with the kind of call writing at 24,500 itself. A bunch of stocks that we're watching out for today. A lot of long positions added on Voltas and Jubilant Foodworks. Both these stocks up 8 to 9% each. And we may see a GNFC exit F&O ban, while there is an outside chance of Sun TV entering F&O ban as well. With a big kind of cuts that we've seen and a sharp surge in open interest, it may, towards the end of trade, breach that 95% mark as a percentage of market-wide position limits and may perhaps enter F&O ban. So keep an eye out on this one.
Okay, all right, Manglam. Thanks very much for that. So that's on the entire F&O space. We have Manish Hathiramani of Deen Dayal Investments joining in on the show to discuss the technicals. Manish, hi, welcome to the show. Well, it's turning out to be a session where we've seen a recovery which has taken place from the intraday lows. The mid-cap index still a little tentative along with the advanced decline ratio. But overall, how would you approach today?
Good afternoon, Ekta and Mangalam. Well, I'm of the opinion that 24,000 to 24,05 is still continuing to remain the strong support. We really haven't had a decisive close below those levels. That's the reason I would not be all out bearish. Therefore, if I'm not all out bearish, I'm really looking out to buy this Nifty. Currently, I'm working with a 24,500 resistance. If we can get past that, I feel 24,800 should be a breeze.
Okay, all right. And what about stocks? How would you approach today's trade in terms of a stock perspective?
Well, I'm working with two buy calls on the heavyweight side. The first one is on Infosys for a target of 1825, stop loss of 1750. The stock has taken good support at 1700 levels with healthy volumes. We have the potential of making a U-turn from here with a favorable risk is to reward. The second one continues to be HDFC Bank for a target of 1700, stop loss of 1630. While the bank Nifty has been sideways, this particular stock seems to be in a clear up direction. We have taken support at 1600 and turned from there.
All right, take that point. HDFC Bank as well as Infosys, both those stocks doing extremely well. In fact, the IT index is contributing on the way up right now. Manish, thank you as always for joining in with some insightful analysis on the frontline index as well as individual stocks. We'll take a short break. On the other side, we have the management of Mayur Uniquoters joining in to detail their first quarter numbers.
Welcome back. Well, for the markets, like we've been pointing out, it's getting a little flattish for the Nifty as well at this point in time. So just about 28 points higher. It's just about holding in the green. So let's see whether it manages to maintain that or not. In terms of a couple of losers, we have NTPC, Adani Ports, Dr. Reddy's despite positive news, Apollo Hospitals ahead of its numbers. All of these stocks which are weak. Adani Enterprises recovered a tad bit from the lows that we've seen, but still in the red as we speak. So down around 1.5% currently for Adani Enterprises. But Mayur Uniquoters, that stock is in focus. Q1 was a good quarter for them as there was higher other income which aided profit growth while margins also expanded. We have Suresh Kumar Podar, who's the chairman and MD of and CEO of Mayur Uniquoters, who joins in to discuss the numbers. Mr. Podar, welcome to the show. Well, let's start with the overall performance for the company. Revenue was up around 6% this quarter, and it was down 4% on a Q-on-Q basis. but you're guiding for 15 to 18% growth in FY25. So it's a two-part question. One is what resulted in a sluggish performance this quarter? And now are you changing your guidance, revising it downwards simply because of this quarter's performance?
No, we are not seeing downwards. Performance was good because of export. We had good exports, and this export will continue. So, and the profit of margin should be same, plus minus maybe a little bit, but definitely double-digit growth will be there. And
So when you
we have started BMW also from this month's full fledged. So there is a very optimistic situation at the moment.
So you are optimistic about growth here on. You said that you are not changing your growth targets for this year. 15 to 18% is what you had spoken about earlier, and that is what you maintain. This is dependent on exports as well. So can you tell us how much did exports grow in the first quarter? And for this year, what is the expectation?
You see, in the first quarter, it has not grown much, but in this quarter, it will grow about 10 to 12%. Of course, this quarter has also increased about 2 to 3%. And because, there was some problem in USA, the factories were closed for 2 weeks for maintenance and all that. But from this month, it has started picking. And this quarter will have good growth. In general export, there is a very good growth. But in export OEM, the growth was very less this quarter. But next quarter, it will definitely increase. Because what I am saying is according to the order which we have got in our hand. And this was not that much because they have closed down for 2 weeks. Because of, there was little setback in the market from the automotive OEMs. But now it will.
Okay, so can you tell us how much did you generate from your auto export business this quarter? And how much are you expecting it to generate in the coming 3 quarters, say on an average quarterly basis, considering that this quarter had a one-off of 2 weeks of a disruption?
You see, export OEM, this month, this quarter, we have about more than 40 crores. And now from second quarter, it will be definitely double-digit improvement from second quarter.
So how much do you expect it to probably get to? Can you give us a figure in terms of, will it be a 10% growth on this 40 crores? Or give us a ballpark figure in terms of the absolute amount that you will probably generate?
No, from export OEM point of view, I am saying that this quarter there will be minimum 10% growth. And total export will also grow, general export will also grow 10%. And what I'm saying that export growth will be totality in 10% minimum.
All right, 10% export growth, largely led by auto OEMs, which will also grow at around 10%. What about your domestic business? What is that likely to grow at this year? Footwear industry has been facing some challenges earlier, but with the BIS coming in, what is the expectation here? What is the kind of revenue that you can generate?
The BIS, you see, footwear, I'm not very confident. We'll go on like this, whatever is here, because still people are confused, but it will not be less than this quarter, because last quarter versus this quarter, also the sale is not reduced. So I think the sale will not reduce, but it is difficult to say that how much it will improve. It will definitely not reduce.
Okay. All right, Mr. Podar, well, we're going to leave it on that note. Thanks very much for joining in and speaking with us and giving us that perspective. So sticking to double-digit growth guidance is what Mayur Uniquoters is expecting. They are expecting a pickup in the coming quarters, especially in the auto OEM business. We'll take a short break, but up next, we'll get you a lot more on the market. Stay tuned.
This afternoon, a bunch of these dairy stocks are doing extremely well. So pull up Parag Milk, that's moved to the high point of trade. Alongside that, we have some traction coming in on names like Dodla Dairy, etc. as well. So the broader markets, we have a bunch of stray stocks which are seeing a fair amount of traction and moving towards the higher end of today's trading range. In fact, Inox Wind is one of them, which is up 15%. We had the management join us this morning. They were confident of their execution of around 800 megawatts in the next year, in this year, and 1200 megawatts in the next year, with margins around 15 to 16% as well. That stock has surged to about 17%. Sun TV, however, is the stock which is slumping down about 9% as the Q1 EBITDA has missed street expectations. In fact, now as we speak, the stock down in near double digit. Vamakshi joins into the details and what the brokerages are saying on Sun TV. Vamakshi.
Well, absolutely. It's an absolutely weak set of numbers for Sun TV. It's a miss across the board. Revenue came in at 1,276 crores. This is a downtick of almost 3%, and it is a miss of almost 2% as compared to the street expectations. This revenue decline is largely being led by the ad revenue decline, which saw a dip of almost 5%. Subscription revenue too was down nearly 2%, and IPL revenues declined by nearly 3%. EBITDA margin came in at 55.4%. This is 433 basis points lower YOY and is much lower as compared to estimates of around 60.3%. This decline in EBITDA margin is largely being led by the revenue decline as well as higher operating expenses and other expenses, which surged by almost 15%. EBITDA and net profit resultantly came in nearly 10% below what the street was expecting. As far as brokerages are concerned, Motilal Oswal has downgraded its rating to neutral from buy. They've given a target price of 860 per share. They say that prolonged weakness in ad revenue is being witnessed right now. There is risk around market share loss as well as strong competition from deep-pocketed OTT players, which will continue to pose concerns for the company. They've gone ahead and cut their EBITDA estimates by around 10% each for FY25 and 26. They're expecting revenue PAT CAGR of nearly 3% each over FY24 to 26. Apart from that, we also have a note coming in from Novama. They have said that due to a weak performance in Q1, they've gone ahead and trimmed their FY25 and 26 EPS estimates by around 4% each. However, with ad spends now increasing by FMCG players, they expect revenues to pick up, and any unlocking of value in its IPL team could be a re-rating trigger for this company. So given those factors, they've gone ahead and retained a buy rating target price of 1,075 per share. But overall, it's a weak set coming in for Sun TV. We have a downgrade coming in from Motilal Oswal, and as a result, the stock is under pressure today.
Okay, all right, Vamakshi. Thanks very much for that. But now let's focus on Amara Raja, which is up around 7 to 8%. They've unveiled their new Giga factory just outside of Hyderabad. They've set it up with an investment of around 9,500 crores. The company will build battery packs and lithium-ion cells for electric 2- and 3-wheelers. Our colleague Jude Sanit spoke to the management about these developments and what it means for the capacity expansion. Listen in.
The facility we're in today is our pack facility that we've inaugurated the phase 1 of. This facility today houses about 1.5 gigawatt hour of pack manufacturing. And today we have our 2-wheeler and 3-wheeler lines up and running. And eventually this facility will house about 5 gigawatt hour of pack manufacturing. This facility, I think, is largely catered to light electric mobility, which we're very bullish on. We think that the trends of electrification in 2-wheeler and 3-wheeler they may they may slow down at times, but mostly we don't believe that these segments are going to go backwards. I think the electrification route is clear. It's unidirectional. We are seeing a lot more, movement on the passenger vehicle side. Little less on the penetration numbers, but definitely we are quite bullish that India will adopt the EV story, especially because I think for our cost points, we're a very value vehicle minded country. And some of the brands that have come in and been able to crack, that price point and the kind of the features, it's definitely going to go up, and we feel that we're in a good position to capture that. Aethers, they have a huge amount of data and user experience that they have from all the bikes and the kilometers they've traveled, the number of packs and cells they have already installed in the market. So a lot of that is going to be made available to us to exactly spec the type of cell that they feel is going to be most relevant to succeed in the Indian road conditions. And by the time we start manufacturing our cells here, I think we'll have a very good design and we'll be able to give that to Ather to start and many other two-wheeler manufacturers. With Piaggio, we are working on, actually it's a pretty expansive relationship we have with them. We started about a couple of years ago. We started with packs and chargers, and now we're into, a second or third generation of pack. Next generation of chargers just coming off our lines in a town called Diguvamagam in Andhra Pradesh. And what we've agreed today also is, in addition to this firm fixed business over the next few years, also localizing cells inside these packs is now on the anvil.
Okay, that's Amara Raja. The stock doing well today. We'll take a short break. On the other side, commodities. We'll bring you an exclusive conversation with Piyush Goyal, Minister of Commerce and Industry.
Welcome back, and let's bring you the excerpts from our conversation with Mr. Piyush Goyal, Minister of Commerce and Industry, at the India International Jewellery Show premiere. Gold, silver, platinum duty cut from 15% to 6% has been more than what industry expected. I asked the Union Minister for Commerce and Industry, Mr. Piyush Goyal, on the government vision behind the 9% duty cut. Let's listen in.
Issue about gold and silver rates needing to come down. I think over a period of time, subsequent budgets, one after the other, kept on increasing gold and silver and platinum import duty rates to an extent where it became almost irrational. In a way, the incentive not to pay that duty, and you know what I mean by that, became very high. Probably just flying down to Dubai and coming back. It worked very well if you even took a piece of jewelry and brought it to India. And this was certainly hurting the interests of Indian industry, hurting job creation, hurting the very vibrant sector which we had developed over the years. I won't say just developed, we had nursed over the years. This is a sector which has grown from thousands of years through the sheer hard work and very, very high level of intricate craftsmanship that we have seen. We have seen coming out from Indian artisans. And therefore, it was felt that it's best that we bring it to a very, very reasonable level and make it affordable for the Indian consumers. शादी ब्याह का मौसम आ रहा है, अभी वापस त्योहारों का दिन आ रहे हैं, शादी ब्याह के दिन आ रहे हैं, तो मंगलसूत्र भी सस्ता हो हमारे बहनों के लिए, और आपके ट्रेड को, आपके इंडस्ट्री को भी एक गति मिले, तेज उत्साह से हम आगे बढ़ सकें. तो छोटा मोटा टिंकरिंग करते 15 था ना, शायद 15 से 14, 12, 10, तो डेल्टा would have still remained very high, which would have not put an end to any wrong practices. So the idea was make it affordable, ensure that it's no more viable to look at any alternate means to bring gold. Everything comes through official channels. Ensure that the industry gets a leg up, particularly when discretionary spending in large parts of the developed world is down. I think the Indian domestic market has really outshone and is growing rapidly.
I also put forth industry concerns on, while the duty has come down, there also is a concern on hike in GST on precious metals coming. Let's listen into on what Mr. Goyal had to say to that.
कौन सी पिक्चर का डायलॉग है वो अनिल कपूर का? Be positive, है ना? कौन सा है? Welcome. Be positive यार, आप लोग ये सेक्टर जिंदगी भर रोता रहा है, जरा कभी तो खुशियां भी मनाओ यार.
जब उनको खुशियां मिल रही हैं, उनको लग रहा है ऐसा नहीं हो इसके पीछे कुछ और आ रहा हो.
वैसे आइडिया बुरा नहीं है, सोचने लायक.
This is not an idea.
मैं अभी तक तो सोचा नहीं था, पर अभी मैं जाके विचार करूंगा निर्मला जी के साथ.
All right. So what we make of that answer is that the GST perhaps is not coming when it comes to precious metals. But I also asked the minister on the FTAs like SEPA Dubai, which has worked quite well for the industry. And the Minister Goyal also told us that it's an ongoing process and such conversations now with the developed countries are on.
It's an ongoing process. Many discussions are happening with different countries, with different group of countries. There's never a deadline to these FTAs. The FTAs evolve over a period of time and can only be concluded once we have a fair and equitable and a balanced trading arrangement between the two parties. India today negotiates from a position of strength. Gone are the days where we were desperate for FTAs. Gone are the days where we made FTAs only with less developed countries or countries who are in the same development cycle as India. Today we are making FTAs also with developed countries. Today we are looking at expanding your opportunities in countries where they have high per capita incomes, high GDP values, and can actually spend money for Indian goods and services.
And finally, listen into what Mr. Goyal had to say on the impact on Indian diamond industry from the G7 rough diamond ban.
The G7 ban on Russian diamonds is a reality. I think many of us from the GJEPC has also been actively involved with the government in talking and negotiating to the G7 group of countries. Dr. Jaishankar, Rajiv Chandrasekhar and I, three of us also had extensive meetings both at the European Union and with the Belgian Prime Minister to work out an amicable solution. The industry is aware that the Modi government has been actively pursuing with the G7 leaders, heads of state. I have been actively pursuing with the trade ministers of the G7 countries. Very recently in Italy, we had the G7 group of trade ministers meeting. There also I had extensive discussions with all my counterparts, including the European Union Trade Commissioner Valdis Dombrovskis. And we have not only lodged a strong protest on the effort to move all the diamond checking to Antwerp, but have also successfully managed to get certain concessions. I think they've accepted grandfathering now. They've started the payments of all the old stuck-up consignments. They have deferred the implementation by 6-8 months until March of next year. I'm continuing to work actively with them to see whether we can have a center in India, whether Mumbai or Surat could have a center where the same thing that they want to do in Antwerp can be done.
All right, that's the Union Minister for Commerce and Industry, Mr. Piyush Goyal, telling us exclusively various things on precious metals and, of course, jewelry as an industry, allaying fears about GST as well. And, of course, as he said, the work on G7 rough diamond ban and how the government clearly seems to be negotiating on that one too. But with that, it's wrap on Halftime Report. Business Lunch will take all the action ahead.